Did the Fed just cause Silicon Valley Bank to fail? Let's raise interest rates to curb inflation, said Chairman Powell. It will be fun, he said, because it will work, he said. Unintended consequences are what often happens when the Federal Reserve Board or any government agency tries to control and manipulate things like the economy. What banks will be next?
The FDIC says that Silicon Valley Bank Santa Clara was closed today.
To put it really simply, this is one of those unintended consequences of higher rates.
Hopefully, this first bank insolvency will push the Fed to moderate or even stop their future interest rate increases. Let's see how the markets look. So let's take a look at how the markets look. Right, let's take a look. Let's see how the markets look. Let's see how the markets look. Well, if we take a look at the markets over the past week, you can see we've had a very unhealthy situation going here. I don't think I need to tell anybody that. ARK invests the riskiest basket of stocks down the most, small caps next, and then everything else kind of clustered up here. And if we look back over the past month, very similar picture. We had attempts at rallies here, but everything failed and finally collapsed yesterday on the last day of the week. And you can see this is a very unhealthy looking market right now. And what about if we look over the last 6 months? Well, you can see we had an unhealthy rally attempt here, unhealthy market here, healthy rally attempt here, and now we're back in an unhealthy market. If we take a look at our bottom dynamics, we had a very brief bottom forming indication here, and now we're headed for another one here. You can see the bottom forming indicator is sitting here right at 100%, but we need this confidence level to continue moving higher, and then we'll have another bottom forming indicator here. That doesn't mean this is the bottom, it just means we have an indication of a potential bottom. You don't have a confirmed bottom until this blue line, the bottom confirmation, comes up here to 100% and the confidence level is high. We're not close to that right now. And what about risk versus opportunity? Wow. Well, you can see where this has been for quite a while. Risk acceleration shot up here back in late February, above 80, and now it's above 90. This is insane. And the risk level, the red line, is well above 80. This is a very, very unhealthy situation right now. If we look at equity versus safety, this also tells a very similar story. You can see that for several weeks now, cash has been ranked number one. Now, we had treasuries in an unhealthy situation here with the highest risk treasuries ranked 9 and 10, and then they started to move up here last week. Well, now as of this last Friday, March 10th, you can see we have a very healthy treasury market with the highest risk treasuries ranked 1, second highest ranked 2, gold 3, cash 4, but equities are down here at the bottom. The only thing that kind of surprises me here is the NASDAQ is leading the equity pool here. Usually in a really unhealthy market, the NASDAQ would be down here near the bottom. It's not. So that's a little bit confusing. But look, this is unhealthy for equities, very healthy for treasuries right now. And why is it healthy for treasuries? Well, when a bank folds, there's a flight to safety, and everybody threw their money into long-duration treasuries as a flight to safety. That's what caused this to happen this last Friday when these were way down here the Friday before. And if we look at buying versus selling pressure, boy, does this tell the story, right? The orange line is selling pressure. The gray solid line is buying pressure. The black line is the price of the underlying index. So in this case, the ETF DIA for the Dow Jones Industrial Average. You can see the price collapsing here. You can see selling pressure going through the roof. I'm not going to spend a lot of time on these because they all look the same. Here's the S&P 500, price collapsing, selling pressure going up. NASDAQ 100, price falling, selling pressure going up. Russell 2000, price collapsing, selling pressure going up. ARK Innovation, price falling, selling pressure going through the roof. Let's take a look at sector rankings because this view of the market gives a different perspective but tells the same story very much. So these are sector rankings. They tend to move fairly slow, but there's some things that are really kind of disconcerting here, like consumer staples is well above consumer discretionary, You don't want to see that. You can see gold and 20-year treasuries up here, ranked very nicely. And you can see cash way up here, sort of in the middle of the pack. Technology is still showing number one, but remember I said these move slowly. So let's take a look at the risk acceleration rankings. And if we look here, these move much more quickly. And you can see that, again, consumer staples is ranked higher than consumer discretionary. Cash is way up here. Treasuries are all up here. In fact, long-term treasuries are ranked number one. This is a very unhealthy appetite for risk. This is not a good look. What about the inverted yield curve? Well, last week we were at minus 83 basis points after being at minus 78 a week or two earlier. And now we're almost 1% inverted, 96.48 basis points. This is insane. This cannot last. It has to break. And how does it break? Either the Fed has to relent and start lowering rates at the short end, or the rates at the long end have to go up dramatically. One of those two or both of them have to happen in order for this yield curve to not be inverted anymore. What about buying and selling pressure for treasuries? Well, you can see that the selling pressure was above the buying pressure here for intermediate treasuries, and then it collapsed and the buying pressure started shooting up. Why? Because everybody's putting their money in safety. You can see how the price moved up dramatically here. If we go to 7 to 10 year, what I call intermediate to long treasuries, buying pressure shooting up, price going up. And what about 20-year long term? Price shooting up, buying pressure really shooting up here. It's very high right now. And what about gold? Typical safe haven in some situations. You can see the buying pressure is moving up here and the price is moving higher. What about Bitcoin? Very high risk asset. Well, you can see that the price is declining dramatically and the buying pressure, while it's above the selling pressure, which is a little bit of a surprise, is collapsing here. This will be interesting. It didn't fall below the selling pressure and the selling pressure didn't shoot up. I'm kind of curious to see how this plays out. As I said in my video a week ago, so look, what's the bottom line? I'm not convinced we're going higher from here. Yeah, we had a healthy stock market rally today, but the signals are still mixed, as you can see, and I'm not buying in at this point in time. Well, I guess that aged well. How much do you want to bet that the Fed either raises rates 0.25% or leaves them flat at 0% at their next meeting instead of the 0.5% everyone was expecting a couple of days ago? Maybe this bank contagion will finally wake Chairman Powell up. He's putting the economy at risk for absolutely no benefit. For now, we have to wait until the Fed and the markets sort through all of this. But right now, keep the hatches battened down and don't venture out into the markets until we see signs of lower risk and higher opportunity for upside. I'm Calvin Rose, and thank you for watching Invest Smarter today. That's all for now.